Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, so we're going to talk about the Redfin CEO, his dire warning on the real estate market. He said it has reached rock bottom, and he said the American dream is in trouble.
Okay, so if real estate has reached rock bottom, do we have rock bottom prices?
No.
Well, what does that mean that real estate has reached rock bottom?
He probably has no clue because he's a tech guy. The CEO, Redfin is not a real estate company. They're a technology company. Redfin basically makes their money because of their technology. They don't really sell houses. What they do is people go to the site and then they give your information to a real estate agent, and the real estate agent gives them money to get your information. That's how these companies work. Zillow does the same thing. Real estate agents pay for what's called leads. And Redfin and Zillow are two companies that give leads to agents. So you're a lead when you go on the site and say, hey, I want to know more about this house. And some agent from Banana Real Estate Company calls you, and then they're paying money to Redfin for, hey, well, I want the information on this guy so I can go sell him a house.
Okay, so that means that when he's talking about real estate having reached rock bottom, he's talking about the amount of money that he's making off real estate agents.
Yeah, real estate agents right now are complaining that they don't have enough leads because there's not that many people interested in buying. And then all of the tech companies are literally losing money. Zillow and Redfin, they're all losing money.
Not quite. It's not that there are not that many people interested in buying. It's that there are not that many transactions.
Right.
So, for every 100 people that we have interested in buying, we maybe have 10 that can actually buy, either because of finances on their part or inventory on the part of the market.
Right.
Okay,
so what we're going to do is go over the article, some of the stuff he said, and then talk about the jobs number.
Ooh.
Because we've been waiting for 2 years. We were told a year ago the housing market is crashing. We're watching it live in real time. And the economy, we're in the recession now, Todd. Last August, I was told, Todd, this is a year ago, August. We're in the recession. We're watching the recession happen live. Okay. And then every quarter, positive growth. Okay. So we'll talk about jobs. Okay. Here's the first quote from the article. And we're going to beat up on Redfin a little bit. You will have to ask the Fed when the market's going to get better because it seems very unlikely that interest rates will ease by the end of the year. So the only real question is whether we're going to catch a break entering the home buying season of 2024. But I think most people here or have written off 2023 home buying season, he said earlier this week. This is like the dumbest comment I've ever heard.
Oh, no. The one yesterday about 100% of your income being toward mortgage, that was the dumbest.
You got to watch yesterday's video. That's the worst one. Okay, here's the thing. The home buying season for this year is pretty much done. It was the spring. The fall is always less. Like, these people come out and say, I predict there will be less sales in the fall. Well, like, in 28 of the last 30 years, there were less sales in the fall than in the spring.
I predict that after sunset, it will be dark.
I'm going to make a bold prediction that probably in about 12 hours, it will be daylight.
Somewhere.
And there will be NFL games being played somewhere. Because it's Sunday.
Yes, and the whole thing is just ridiculous.
No, this is ridiculous. So he's like, I think people are pretty much done. It's October, guy. He just made this it's October. The year's almost over. So yeah, the home buying season.
Okay, and the whole point of this is this has nothing to do with anything that he's talking about. He's talking about his bottom line because his bottom line is about the number of transactions. Well, I've got a newsflash for him. The number of transactions are down for everybody, including for him. So yes, he's making less money because there are less transactions. Duh.
Okay, here's the next quote. This is another singer. There's some stuff in here. Okay, the bigger implications are that so many people have stopped believing in the American dream. 1 in 5 millennials believe they will never own a home. And if you don't have that conviction, you're going to get your peace. It's really hard to invest in the long term. It's really hard to believe that society is going to work out for you. I think we've come together as society, build more houses and figure out a way the next generation is going to be able to buy on our site. Well,
he's a billionaire. He can build houses. So what's his problem?
1 in 5 millennials believe they will never own a home. It's more than that because A third of all people never own a home.
Right.
A third of all people never own a home. A third of all people are lifetime renters. Only 2/3 of people own homes. The other third are renters.
So what he's saying is that millennials are really optimistic that they will do better than society at large.
Yeah.
That's fantastic.
Yeah, they're saying if 1 in 5 believe they will never own a home, then 4 in 5 believe they will own a home.
Right, which means that only 20% believe that they will never own a home, compared to society at large that 30% don't own a home, which means that millennials are really optimistic. Woohoo!
The other thing is about buying into society. You don't need to be a homeowner to buy into society. Does Elon Musk own a home?
Nope.
Yeah. Like, there's a lot of people that don't own homes that make a ton of money.
Right.
Or that have...
Home ownership is not for everyone, and home ownership is not a good fit for everyone. So that's... It's a misdirection, honestly. That's what it is. It's a misdirection.
I'm a bit tired of people complaining about the 7% rates. Having bought my first house in 1987 when I was a second lieutenant in the Marine Corps, and I had a 10.5% interest rate.
Yep. I've had one of those.
10.5%. Before you go, yeah, Todd, home prices were a lot less back then. Sure, but I made like $1,700 a month gross. So that meant on each paycheck I was getting like $700 and my mortgage payment was $550. So I literally was paying $550 out of my first paycheck. That left me $150, and then I had $700 for the rest of the month. So yeah, home prices were cheaper, but incomes, a second lieutenant today makes like 5 times what I made.
Okay, so I remember my household income being $40,000 and the mortgage payment being $40,000 annually, and the mortgage payment being $1,500 a month. So no, don't go there with me. I get it. I've been there, done that. It happens.
It's $18,000 a year.
Yeah.
Oh my God.
Against the $40,000 gross annual income. So yeah.
Okay.
Don't go there.
All right. Here's the next one. I thought this was pretty funny. Now this isn't him. This is the art. This is the whoever wrote the article put this. First of all, it says real estate companies like Zillow, who's not a real estate company, right? They sell leads.
Okay, so Zillow is a marketing company. It's a technology company. It is certainly not a real estate company.
Yeah, they tried real estate. They failed, and they stopped doing it. They're attempting to attract more home buyers into the marketplace. One, is that a problem we have, that we don't have enough home buyers?
We have far more home buyers than we have homes for sale. And so the real estate market does not need more home buyers.
They're launching a 1% down payment program that aims to help potential buyers who have been priced out of the market due to high borrowing rates, excessive rents, and elevated home prices.
So here's the thing. My thing is that a 1% program, a 1% down program is predatory. So let's call it what it is. That is predatory. Because what you're doing is you're putting people in homes who cannot afford homes.
They have no equity.
They have no equity. They have no savings. They have no financial education in order to be able to manage this incredibly expensive asset. So that is predatory.
Okay, here's the funny thing. This magical 1% down payment program, I talked to a lender. Every single lender has the exact same program.
Right.
It's not Zillow's program.
No.
Zillow has basically brokered it out to a mortgage firm that does it. But every lender can do it. It's actually 3% down. It's like an FHA loan, but the mortgage company covers 2% of your down payment. Now what you do is you get a higher rate, and then they make money on the back end when they sell the loan. So they make their money back, but you don't have to pay it. Here's the other thing.
The borrower is paying the 2% in other ways. They're just
through a higher rate.
They're just not paying it at the closing table.
Here's the other thing. It's only in Arizona that this is being offered by Zillow. So they made a big deal like Zillow's going to help. We need more people to buy. That's the problem right now. And it's not and the fact that that the CEO of Redfin and whoever wrote this article said this to me is kind of hilarious, I think. They just completely don't get it. They're like, home affordability is a problem. We need to get cheaper ways for people to buy homes. No, we don't have that problem right now. The problem we have is there aren't enough homes for sale. Okay, here we go. Home affordability is a 4-decade low. If I'm only putting 1% down, is my payment going to be higher or lower than if I put, say, 20% down? Your
payment's going to be higher. And if you need that, then, as I said before, then you probably should not be buying a home because you need 6 months worth of reserves. That's the right thing to have in order to be able to afford that hot water heater that goes out, or that car that unexpectedly breaks down, or that illness that keeps you from being able to earn wages, whatever that is. So these people that are putting 1% down, not only do they not have any home equity, they probably don't have a lot of savings, they probably don't have a lot of financial literacy. They're paying the extra 2% that they would have been putting down through a higher interest rate. So that's why I say this is predatory.
Okay, here's another. Okay, I'll finish up with the quote. Or let me talk about the home affordability thing. Mm-hmm. If you're only putting 1% down, your home affordability is much worse.
It is,
because your
absolutely.
payment, affordability is your payment. Mm-hmm. Your payment's much worse. So they're touting, we're going to fix affordability. You only put down 1%. I'm like, wait, if I only put down 1%, isn't my mortgage payment even more? Yeah, but it's more affordable. How's it more affordable? Like, how do you help affordability 1% down program? So this whole thing's a joke. Here's the rest of it. Prices are up 40% since 2019, and now interest rates have compounded that. And I think the real issue for us, this generation owns less than 20% of American wealth entering home buying age. I'm talking about the millennial generation, whereas baby boomers own more than 30% of American wealth. He continued.
So, a little logic here. So somebody at the beginning of their wealth accumulation owns 20% of the wealth, and somebody at the end of their wealth accumulation owns 30% of the wealth. Well, no duh. They've got 40 years on them. They should own 30%. They shouldn't own less than that. They've had a whole lifetime to accumulate that.
Yeah, remember there's a generation, Gen X, we're Gen Xers, that are between the boomers who are older than me and the millennials who are younger than Juana.
Right.
Okay, so we're kind of in the middle there, but this whole thing is ridiculous. They've been around longer. They work jobs, they put money in 401ks and they have pensions. They bought real estate. They've been accumulating assets. They've
been around almost 40 years longer.
Yeah, they've been around so much longer. This whole idea, why do those boomers have all the money?
Because they've been around 40 years longer.
They're 65 years old and they're going on river cruises because they're rich and they own 5 houses or whatever.
Because they've worked their whole lives and they've earned it.
Yeah, this whole thing was kind of a joke to read the article and just like, oh my God, it was just a bunch of complaining and whining. But here's the interesting thing. The comments we're saying are, first of all, that the economy, the crashing economy, it's ready to crash. And we've been hearing this now for, I think it was 2021 was the first time that it was the end of 2021 was when it broke 50%. It was the fourth quarter of 2021 was going to be a recession. And then it got pushed to 2022, and now we're in 2023. And now they're saying there's a 50% chance in the second quarter of 2024 there'll be a recession, right? Okay, so this number just came out. The U.S. economy added 336,000 jobs last month, almost twice what was expected. Now, we're going to explain how real estate's affected by this.
Well, I want to point out something.
Okay.
That these jobs were added at the tail end of the summer, at the tail end of the temporary jobs, right? Because it's summertime, sees a lot of seasonal temporary jobs. So I think this is an important thing to keep in mind. These are jobs that are added at the tail end, and this is important because these jobs are then able to be filled by these temporary workers. So we're still in the situation where we have more jobs than we have workers.
Maybe these 336,000 jobs are all to work the Halloween stores, right?
Boo.
Okay, the key is twice what was expected. This is September jobs report just came out, okay? This is also what's interesting. This is this big chart here, which I'll leave up for a while. This says U.S. economy had 336 jobs employed. Unemployment rate remains at 3.8%. Now, here it shows month by month job growth. Right? So every one of these is positive. There wasn't a month yet. Now here in Vegas, we have this very interesting phenomenon. We lead the nation in 2 categories. With the highest unemployment rate, 5 and change, 5 point something percent. And we also have the highest job growth in the nation, 4% job growth. We have 4% more job growth than jobs are growing at 4% than anywhere else in the country, right?
Woo-hoo.
And
look, we're Vegas, we're at the top. We're either at the top or at the bottom. But in this case, we're at the top.
The high unemployment is because of our 2 largest industries, which have the historically 12% inflation 12% unemployment between the 2.
Right, because they have a lot of churn. So this is construction and leisure.
Yep. So we of course that's literally half of Vegas. You're either building something here or you're being entertained or whatever on the strip. Okay.
Right.
So this is very interesting. This does not show an economy in distress. This also shows jobs. Probably there are still wage pressures. People are working. This number here, all these job growth and everything, means people have choices to move to better jobs if they want. And here's the other thing. This is the reason why the number of seriously delinquent mortgages is the lowest it has ever been since it was ever recorded in the last 24 years. They started recording it in 1999.
Right, because mortgages, despite what you're hearing, mortgages are the most affordable they've been because most people have those lovely 3% give or take loans. Yes, there are people that have the 6-7% loans, but they are such a small sliver of the people who have mortgages because those are just very recent mortgages. Everybody else refinanced during COVID and is having a lovely time of it, or their homes are free and clear, which is 42% of homes.
It was funny. I was looking at the California foreclosure report. It's a weekly report. And it was showing like San Diego last week. Now remember, San Diego's a pretty big city. Had 3 foreclosures. 3. They were probably having 70 a day in 2007, 8, 9, 10, right?
Look, 3 foreclosures, that's not even equal to the number of people that die a day in San Diego of natural causes.
Okay. Average hour earnings rose 0.2% in September. So earnings are up, bringing the annual gain to 4.2%, according to Bureau of Labor Statistics jobs report released Friday. So people are making more money. What's really interesting to me is the people who bought a house 2019 or before that bought it at a cheaper price, and even if they didn't refi, they probably still only have about a 4% rate, right?
Right.
And that by that 30-year fix, they've been locked into a fixed loan for 4 to 10 years, right? But remember, they're making more money. So now they have more money to do what?
More money to travel and spend throughout the economy.
Or invest. Save and invest, right?
Yep.
If you're a renter, what has happened? Let's say 2 people 10 years ago, one bought a house and one's renting. And the renter said to his friend who bought the house, you know what, you're dumb because your house payment's more than my rent. So it's costing you more money. I can't afford to do what you're doing and he's like, you know what, we're just going to do it. And he goes, so I can't believe you're going to have $1,500 mortgage payment. I only pay $1,100 in rent, right? Well, today that guy's still got a $1,500 mortgage payment. The other guy's paying $2,200 a month in rent.
Right.
And he gets nothing out of it. The $1,500 a month.
Well, he does get something out of it. He gets instability. He doesn't get equity. He doesn't get a tax write-off. He gets to move every time his landlord doesn't want him there. He gets lots of things like that.
Okay, and revisions show stronger job growth. Federal data is fluid, frequently subject to change as more detailed and accurate information becomes readily available. Today's headline job numbers, that surprising 336,000 net job gain, is an initial estimate to be revised twice more. These get revised both ways. Sometimes they get up, sometimes they down. This year, most of the job growth revisions have been up, and also the monthly GDP numbers have been up. Now, why that is significant is that shows how strong the economy is. That's why we have inflation. That's why borrowing is so expensive. That's why the cost of money is expensive. That's why mortgage rates are, high sevens, because you could take, if you had $500,000, you could buy a house, or that would probably appreciate at 4 to 5% a year, or you could go and put it into a treasury note and get 5% out of that, 5+%.
Or
right?
put it in a money market and get 5%.
Risk-free. I mean, basically it's risk-free. You're not, you're not going to, you're just going to get paid 5%. So the strong economy and if you have a strong economy, you have high employment, you have job growth, you have wage growth, and you have very few homes on the market, and you have home builders building under what's needed, right? Over 2 million people came into the U.S. just through the Mexico border in the last 12 months, and they all have to live somewhere. And new home builders in the last 12 months have built about 700,000 homes. We know that almost 250,000 homes disappeared right? Because of fire or other problems, eminent domain, they're gone. So I'm still wanted confused, and I need this explained to me. And the people come in the comments and tell me all the time, and they try to explain it. How is it possible with all those positive things happening, plus inflation, which we know makes everything cost more money, including the price of a home, is just interest rates by themselves supposedly the culprit of the worst housing market we've ever had, even though home prices are the highest we've ever had?
You got me. I don't know. I mean, look, interest rates alone don't do anything. Housing prices alone don't do anything. No one thing is sufficient to completely undo a market. So even with all this put together, look, you have 42% of homes that are free and clear. You have most people have a 3% thereabouts mortgage, give or take. You have no housing inventory. There's a lot of support for the housing market. There are more buyers than there are homes. I mean, I don't know, what more is there?
I don't know. The other thing is, we've said this on a bunch of videos already, the people who need these 1% loans because they don't have any money, and apparently that's the problem of buying a house, they don't have any money. If you don't have any money, then the bank's not going to loan you money. Like, if you don't make enough money to make the payment, they're not going to just give you a loan. And the problem isn't that we have all these houses sitting around that no one wants to buy. Everything, we don't have an active listing, right?
No.
We don't have an active listing. Do you know why? Because everything sells, almost immediately.
Right. The other thing that I've seen out there is I've seen these loans where they're loaning over 40. They're loaning to people whose mortgage payments will be in excess of 40% of their income, and again, I think those are predatory.
Yeah.
I mean, if you've watched this channel,
how much down do they have to put? Do you know?
They're these 1%. There are these loans that I believe I believe homeownership is a great thing, and I think that it's good for most people. I think everybody should have the opportunity to buy a home, but I don't think that homeownership is right for everybody, and certainly not at every point in their life. And I really do not like these. I keep saying that they're predatory loans, but they are. Look, when you're loaning money to people who can't afford it, isn't that the definition of predatory? I really don't like that, and I am pro home ownership, but I am not pro. I think this takes advantage of people. I think it sets them up for failure, and I think that setting them up for failure is wrong.
I think that we're going to see, you can blame the boomers, but, and some of our clients are boomers that we manage their investment properties, and a lot of Gen Xers, mostly Gen Xers. They're not interested in selling. No one has said, hey, I'm thinking of selling at some point in the future.
No.
They're actually, the one I talked to him today, they own 4 houses total. 1 they live in, 3 they rent.
Yeah.
Right? They want to get up to at least 5 rentals. They want to get 2 more rentals.
Yeah. Yeah.
Gen Xers.
Yep.
And it's prices are up pretty high. That's fine. I make a lot of money. We've been saving for the next rental.
Right.
That their kids basically will inherit someday. And they're only Gen Xers. So they're not going to die in the next probably 30 years.
Right. And and these are people who have also helped their children buy houses. So it's not like, these rentals are the only things that they own. So it's really interesting. Look, real estate is a great investment vehicle. It should be part of most people's investment portfolio. Whatever's right for you. We don't necessarily pump real estate. Like I said, it's not right for everybody, and it's not right for everybody at every point in their life. I just I like it when people buy homes who can afford them and who can be comfortable in them, rather than living hand to mouth and being one hiccup away from losing their home.
And I'll point this out too, because we get accused all the time being cheerleaders for the housing market. and everything. We do have rental properties, and we have no debt on the rental properties. They're all free and clear.
Right. So, I mean, but a lot of people, like I said, we're part of the 42%.
Right, part of the 42%.
Which, by the way, that number is increasing.
We are not dumb. We do not have all our eggs in the real estate basket.
No.
As a matter of fact, the real estate basket is not even the largest basket, but it's part of a balanced portfolio where you have stocks and retirement funds, and you have real estate, and you have cash, and you have other assets, because you can't just rely on, I'm going to have one thing, and then some event happens and that one thing ends up not being able to support you in the long term.
Right. So if you lose your desert tortoise, you have to still be able to pay the bills.
Desert tortoise got out. We were very upset. We should have put a video up of the tortoise. He got out, and he was out for, was it over 24 hours?
Yeah.
He was out for about 28 hours, and then he was discovered. We have a very large yard, so he got lost out there somewhere in the yard, and it was behind a house that's in the back, like behind a bunch of stuff, and finally he was out there. And we were able to retrieve our desert tortoise, who you would think these things, it's a tortoise, right? But these guys are really good at hiding.
Well, and this guy can really put the speed on when he's sufficiently motivated.
Yeah. Anyway, we thought that desert tortoise is pretty fun. He's 3.5 now.
Yes.
We think he's a he. Yeah. So.
Anyway, so if you have a desert tortoise, leave us a note and tell us your desert tortoise name and how old your desert tortoise is. Tell us what you think about the real estate market, where you're watching from, what's happening. If you want to share any data with us, we love data shares. Please remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.